Hi there, welcome back to the program. Well, President Trump has announced that the US and Mexico have reached a preliminary trade agreement. The agreement comes after the president, criticised the North American trade deal and sparked a trade war with the US's southern neighbour.
They used to call it NAFTA. We're going to call it the United States-Mexico Trade Agreement.
From the Oval Office Monday, President Trump announced that the U.S. and Mexico have hammered out a preliminary trade deal that, quote, modernizes and rebalances the trade relationship to reflect the realities of the 21st century. The president has been a vocal critic of the 1993 NAFTA treaty, and negotiations to rewrite it began about a year ago.
We'll get rid of the name NAFTA. It has a bad connotation.
In an effort to take on what the president said were unfair trade practices worldwide, the U.S. imposed tariffs on some steel and aluminum imports earlier this year, including those from Mexico. Mexico retaliated with tariffs on some U.S. products, including apples, pork, and bourbon. The details of the deal have yet to be made public, and it remains to be seen whether Mexico has agreed to the terms announced. But the White House says the deal with Mexico includes rules incentivizing more automobile production in the U.S. and commitments to improving agricultural trade.
This is something that's very special for our manufacturers and for our farmers from both countries, for all of the people that work.
The White House characterized the proposal as a bilateral one, meaning that unlike NAFTA, Canada was not part of today's announcement. But President Trump indicated that that would happen separately.
One way or the other, we have a deal with Canada. It'll either be a tariff on cars or it'll be a negotiated deal.
So some headway, it seems, on a potential bilateral deal between the US and Mexico. And that certainly was one of the reasons given for what was a pretty decent night as far as US equities are concerned. The S&P and the Nasdaq hitting all-time closing highs, as well as intra-session highs during the session. To talk more a little bit about that and global markets more broadly, Claudia Kwan, investment analyst at Morphic Asset Management, joins me in studio. Claudia, thanks for your time this afternoon. Let's start with the US and what's been, continues to be a great run. I think now the longest bull run that we've seen, certainly over in the US, but broadly in global equities. Your thoughts on US equities, how they're poised at the moment, and what, if any, impact all of this trade talk, these trade skirmishes, if you like, are having?
Right. I mean, the US economy is going very well. As you can see, it gives Trump quite a lot of flex in terms of his political sway globally. And we don't have a strong view that that's going to change anytime soon. We do see that the near-term outlook there positive. However, we're sort of a little bit more focused on the emerging markets economy and how that impacts places like China and the negotiations with Mexico and Trump's attitude and the way he negotiates is important for us to see the read-throughs, to see whereabouts we might go as he looks to China negotiations.
Well, how are EM looking at the moment? I mean, there's been an awful lot of focus on it, most recently, of course, Turkey, and I suppose the overarching issue beyond those unique to each economy and leader, if you like, the surge in the US dollar and the liquidity, essentially, that it's sucking out of the global system and the stresses that puts on EM. I mean, how does that all play out from an investment perspective when you're looking at potential emerging market opportunities? Yeah,
the currencies are huge importance. On Friday, you saw the China Central Bank come out to stipulate that they're going to support the currency through counter-cyclical measures there. That's important from a domestic economy perspective, but also in signaling to Trump, who has repeatedly accused China of currency manipulation. So it strengthens the idea that they might not come under, more near-term attacks from him there. Is the economy in the place to allow that to strengthen materially? We don't suspect it is. The data coming out sees that more likely the outcome is just a stabilization here.
It's interesting, a question about trying to get a gauge on the strength of the China economy. There's been a number of measures, be they some fiscal stimulatory sort of announcements, as well as some monetary as well. Suggestions being, oh well, that's a positive for Australia, great, it's fantastic. But others who suggest, well, maybe what they're doing is, one, readying themselves for a potential trade war if it escalates with the US, but also perhaps they're looking to counteract some pockets of weakness within the economy that they may be concerned about.
Absolutely. I think you're right on both fronts. News out of the US last night is citing Trump saying that actually China is willing to talk at the moment, but he doesn't see it's the right time. But then comments out of Beijing are saying that they would prefer to wait until the US congressional elections that don't happen until November to continue talks. So I think near term we will see we are actually starting to see the Chinese government start to stimulate, given the domestic economy is quite weak. At the beginning of the year, you saw the Ministry of Finance come out to say that it was actually reducing its fiscal deficit targets. You also saw about 12% of public-private partnership infrastructure investments put on the shelf, which are now coming online. So at the margin, we're definitely seeing the first half infrastructure growth slowed to 5%. This is versus up 20% last year.
Right.
So we do expect infrastructure growth to come back, not to the magnitude that we saw in the previous spending cycles of China, but definitely at the margin, we would expect this to be one of the key growth drivers for the domestic economy. In terms of the trade relation issue, we actually don't see it coming to a close in the near term. Last week, you saw an additional $16 billion of tariffs on imports. That takes the total amount now to $50 billion. And some have cited it could get up anywhere to $200 billion. However, I think as at the end of this year, we could still be discussing this issue.
So how then do you think this plays out? I mean, you made mention of the strength of the US economy. I mean, it puts President Trump in a pretty strong position when you've got the kind of growth metrics he's able to post, or the economy is able to post. However, he is subject to an election cycle, whereas you've got China potentially looking to strengthen their own economy with an equally kind of, I suppose, positions themselves as leaders in a bit of a strong man who basically is there for life, but has the benefit of time. He doesn't have to worry about election cycles. So you've got these two opposable, sizable forces.
Yes, and I think what she's doing at the moment of holding on issues such as the accusations of intellectual property theft is actually the right move here. We would expect him to be maybe a little bit more accommodative on the trade side, especially where it pertains to LNG or soybeans. However, the ambition of a Made in China 2025 pointed at high-tech products, we do not see that he will move there, and he has the benefit of time versus President Trump. The other thing that we're hearing out of the US is you will see, I think, in 2019 some maybe shift in the political landscape or his attitude towards China. The 2Q Senior Service Loan Survey came out to say that actually the purchasing of commercial real estate in the US by Chinese buyers actually fell in 2Q. US
quite sensitive to Donald Trump, I suspect.
Yeah, exactly. And then you saw a US trade expert actually come out to report on a hearing last week with small to medium enterprises in the US actually complaining about the tariffs on what's over 6,000 goods now. Anything from seafood to bicycles. So politically, this actually might turn for him slightly into 2019.
Just conscious of time, so a couple of quick ones. From, again, an investment perspective, Chinese equities, how you view those, investing in the China market, and secondly, what, if any, implications, ramifications there are for Australia as to what's happening with China?
Right. So our portfolio currently is more exposed to these infrastructure companies, some with all with a positive ESG angle, as Morphic is an environmental social governance fund. So we do favour those, and we could see a stabilisation in the Aussie dollar, or maybe even a little bit of a rally, and maybe some bid for resources if we do see China go back to a lot of fiscal stimulus. Our base case is that we're not going to see it to the magnitude that we saw in prior spending sprees. However, markets are driven by the margin, and at the margin we would actually see this probably more positive for Australia than negative.
All right, some good news to end on. Claudia Kwan, thanks very much for joining us.
Yeah, thank you very much.
Claudia Kwan there from Morphic Asset Management. We need to take a break. When we come back, we will get back to reporting season. Pacific Scottish